If you're buying a house and you're taking out a loan, let me just say there are 5 huge mistakes you want to avoid when taking out a home. Otherwise, you could lose the house. Hello, my name is Dana Pollard. I'm a real estate agent in Texas, and I have a guest. His name is Jeff Dynick, and he's with Family Tree Mortgage. And he's an expert in mortgages with more than 30 years experience. And I'm super excited to announce that we have partnered with Family Tree Mortgage to help you move from out of state or just moving locations to Texas. We wanted to put something together that can really help you in this transition because it's a big move, right?
It is.
Moving from out of state. All right, so we want to talk about the 5 biggest mistakes, and these may seem a little obvious, but have they been done?
They have happened.
I've been an agent, I can't even keep up now, 14, 15 years. Been in new homes before that, and before that, rental properties. So I've been in the industry quite a long time too. And it's really, they seem like a given, but if you've never purchased a home, you may not know. So we want to share these tips with you. So this is not the first one, but my first point is just don't quit your job in the middle of trying to purchase a home. Now, if you are moving from out of state and you're transitioning jobs, that's okay. Preferably, most likely, it really needs to be in the same industry. So if you're a teacher in another state and you're moving to Texas, you probably want to get a teacher job, something in a similar industry. That's correct, right?
That is correct.
Yeah.
Not always, but it is most of the time. If you're in the same industry, it's much easier than when you switch industries.
Yes, it's more difficult to get a loan if you've switched industries. But if when in doubt, call Jeff.
Call me.
And he can help you navigate through that transition, okay?
Absolutely.
So I know a lot of you are out of state. But once you have a job and you have a letter in hand saying this is your job offer, start date, and all those things, then these are the 5 mistakes you don't want to make, okay? First mistake is making large purchases. Tell me a little bit about this.
Oh, Dana, I mean, it sounds simple, but when people get into the mortgage process and they get that pre-approval or their loan's been submitted to underwriting and it's approved with conditions and things like that, they think it's okay to go out and buy a new car, a Harley Davidson, a boat, multitude of different things. So, rule of thumb, do not go out and finance any large purchases either with credit or installment loans, whatever the case may be.
Or even using cash, right?
Yeah, don't spend your cash. That's a big one. You want to have, even if you have excess of what you need for the earnest money deposit and closing costs, a lot of times underwriting systems like you to have extra money called reserves. And so when we can show reserves, it's a lot easier to get a loan done.
Yeah, that's a really good point. So whatever money you have in the bank, they're going to qualify you with that. And so, yes, if you're going to be spending, I see many people, I have seen people purchase cars. And you must have seen people boat a Harley, which is why you say that.
Yeah.
But also sometimes people will start stocking up on their furniture or pre-ordering the refrigerator, which sometimes is actually necessary. In this past year, it was necessary. But this is what I would recommend, and I know he's going to agree. If you are going to buy furniture, just check with your lender before making those large purchases, right?
Absolutely.
Because it doesn't mean you can't, just check first.
And a lot of times the furniture companies will let you just put down a deposit to hold it until after closing, then you can finish out the financing. So that might be an option to avoid that first pitfall.
That's a great one. Thank you. The second mistake is forgetting to pay your credit card bills. Oh, okay. Again, this may be a given, but we've kind of lived through this, and I would say, let me let you comment, and then I have a story.
Okay, so sometimes, not always, but sometimes people get caught up in the mortgage process itself. You're moving to Texas. You're trying to coordinate all that. You're trying to get children in school. You're trying to get your new job situated, and you forget that your credit card is due. It happens. I advise people at times, set everything up on auto pay if you're going to be super busy. Just, you can always take it off auto pay, but it eliminates you getting a late payment, because we actually do re-pull a soft pull credit report right before closing. And if you were late or you missed a credit card payment, that could be very problematic when it comes down to the time to actually close the loan.
Yeah, Jeff, I have a story. I did this 2 houses ago, and it was an accident, and so it may be an accident for you. The last house we purchased, not this last one, the one before, I had a credit card that was paid off. And so I wasn't checking this credit card. It just had a 0 balance. And then out of the blue, during our loan process, it shows late. And I'm like, I'm not late on this. I don't have any late payments. Anyway, it just turned out that I had a yearly reoccurring membership,
yes.
and it wasn't on auto draft. And then our credit score got knocked down, and when they ran that soft pull, they were like, oh no. Number one, we had to jump through hoops and get that paid and show proof of it. And on top of that, it lowered our credit score, which hiked up our interest rate. And I was so angry at myself.
Yeah, one late payment on a credit card can drop your score 60 points overnight or more. And that can completely take you out of the game or put you in an entirely different interest rate bucket. So It is very important. And not just cards that have fees that you forgot to have an annual fee, but you have Netflix set up on a card, and that's the only thing you have set up on it, and you forget that it's fixing to be time to pay Netflix, and then that shows up, but you didn't realize you had a balance on it. So that I've seen that happen as well. Yeah.
Oh, yeah. So not that any of us intend, but when you're getting a loan, just take extra precautions, maybe double check. Like if I were to do it all again, I would just double check all of my 0 balance credit cards.
Yes.
To make sure nothing crazy is on there, because it had been like 90 days. I don't know. It was ridiculous. Okay, which leads us into number 3, which is you don't want to co-sign. Tell me a little bit about this.
Okay, Pete, a lot of people don't understand that when you co-sign a debt, you are responsible for that debt, even though you may have a child. You go, for example, co-sign for a car.
Okay.
And that child's going to pay that car. That's fine, but you are responsible for that debt because your Social Security number is associated with that debt. So again, it's going to show up as your debt, not just the individual that you co-signed for. And that adds to your debt to income. It may decrease your credit score because you just opened up brand new debt and there's no payment history. So, try not to do these things again as we go through the process. After the loan closes, you're free to do anything you'd like. But until then, these things can create big problems at closing where you may not even be able to get the home. I've seen it happen more than once.
Yeah, me too.
Yeah.
I have too. It's so sad.
It is.
Very
it's
sad.
tough.
Okay, the 4th thing is you don't want to spend your extra money. We kind of talked about this a little bit, but extra money that you really need for closing costs or reserves. Do you want to comment any more on that?
No, again, just once we verify your bank statements and we verify how much money you need to close and for closing costs, down payment, you don't know really if we've counted the extra that you have for reserves for the approval. If you have any questions or there's something that comes up, an emergency, I know things come up. Everybody has lives. You might have something you need to pull some cash out for during the process. Please call and ask me before you do it, because it may make the difference between getting an approval and not getting an approval.
Yeah. So during this mortgage process, your loan officer is your friend.
Yes.
He's not trying to bully you. He's not trying to pry. All he's doing is trying to help you close on a home. So feel, sometimes it's intimidating, or we feel maybe even a little ashamed of our past. Because, and I'm sure you get that a lot, where, okay, we haven't been perfect in our history. And so it's like, I don't know if I want to show all this to you. But really Jeff is here to help you, whatever it takes to overcome any kind of obstacles, educate you on what you need to do in the process so that you can get a home.
Yeah, I always equate it similar to going to the doctor. The doctor cannot help you if you're not honest with the doctor about what's ailing you. Even though it may be embarrassing sometimes, or, depending on what it is, I am not here to judge. I am here to help. And if you're not honest with me and upright forefront about everything going on, I can't help you. I can't, put together the pieces of the puzzle to make it work so you can buy that home. That's what I'm here for. I'm just here to help. Yeah. I have over 30 years seen everything under the sun. And you know, things happen. Life happens. We're just human beings. And again, you know, just be honest with your loan officer. And if you have questions, please always pick up the phone before you make any decisions, big decisions. Yeah, it takes 5 minutes to say, hey, is it okay if I do this?
Yeah. So you're not bugging him. He would rather you call and ask
Yes.
than you not ask because you feel like you're bugging him or wasting time, because you're really not. He wants to protect you.
Absolutely.
Which leads us into the last point, and I know this is not you, but obviously don't make any false statements on your loan application. That's kind of a really big to-do. Share a little bit more on that.
Yeah, they have really cracked down on mortgage fraud all around the country, nationwide. FBI's white collar division is now, I believe, larger than their criminal division.
Wow.
And mortgages and real estate are a huge, I guess, hot button for them because of money laundering and things like that. These bad players seem to think that it's easily done to launder money through mortgages and through real estate, and a lot of them have gotten away with it. But I'm telling you, if you make false statements on the mortgage application and it does come up, now I'm not the police, I'm not the FBI, I'm not going to turn anybody in. I'm just going to say, I'm sorry, we cannot move forward with your application. But if it
But how would you know?
We have so many checks and balances because of what I just stated with all the fraud and the...
There's too much internet stuff. Everything's integrated now. You can't get away with it as much as you could.
Those of you that remember 2008, 2009, when the subprime market almost took down 3 world economies,
Yep.
and that was only the 13% of the mortgage industry, they, after that, have put so many checks and balances in place. Every I is dotted twice, every T is crossed twice, cross-referenced, cross-checked. So there are a lot of things behind the scenes that are going on to double-check your information that you're putting on that application.
So you don't want to do that and get caught.
You don't want to do that.
Do you have any examples? Because I remember, it was actually on the selling side. I had a seller that was hiding that he had a wife in another country. Because he wanted to sell the home and he didn't have her here to sign. And so we did still sell the property, but we had to send documents, and get them to the embassy and all this stuff. But anyway, they tried hiding it and you just can't get away with stuff. Have you seen do you have any stories?
I previously, not so much now because of the checks and balances, but I have seen people create their own paycheck stubs. I have seen people create their own income tax returns. State that they own businesses that they really don't own. All kinds of things. Back in the day, there was a thing, it's still a thing, but it's called a straw buyer, where it's actually not a buyer and somebody is in cahoots with the title company and they're creating a false buyer to do a mortgage for somebody that doesn't exist. And that was pretty prevalent back in the early 2000s. I was actually part of a ring of that, not part of it, but the FBI came in and
was questioning you guys about it.
They were asking to see all our files, and they uncovered this one ring that was going on, and it was multiple millions of dollars worth of loans that were to people that didn't exist, and everybody was taking the money and splitting it. So
that is so crazy.
It is, and all those people are in federal prison now.
Okay, so don't do that.
Yeah, don't do that. Don't do that. Just be honest.
Just be honest. That's all we're asking.
That's all you can do is just be honest, and if we can, we'll find the best way to make it work for you.
Yeah. Do you have any? Are there any red flags right now? What are some? Do you know of anything right now that's going on fraudulent in the housing industry at large?
Not any big things going on. I could talk about some other instances that were going on in Chicago a few years ago, but right now there's not really any red flags as far as real estate or mortgage fraud, but there are things that they are targeting or looking at closer, and a lot of it has to do with large deposits.
Oh, okay,
It has to do with anti-money laundering and the Bank Secrecy Act. Any deposits over $9,999 are automatically reported.
Okay.
Now, they're not all investigated, but they are automatically reported. Or if you have a combination of deposits by the same people going in the same account, just under that threshold, they look at that too. So yeah, just be cautious. It's okay to put cash in your bank. You know, we would prefer that, you know, if you put cash in your bank that we can source it, because we can't use it if you can't source it. And a lot of people run into trouble with that. So, you know, just if you have questions, call and ask me. This
is a good mistake I'd like to bring up. It's not on our list.
Yeah.
But I remember going through the last couple of homes I've purchased, every single deposit, it had to be sourced.
Has to be.
And so I wouldn't have known in my early years of buying property that I can't just put 10 grand of cash in my bank and say it's from my mom.
Right.
I mean, maybe you can, maybe mom.
With a gift letter. Mom,
you can with a gift letter.
We can do moms with a gift
letter. As long
letter.
as your mom signs off.
Yes. Again.
But you just can't have random payments like that. You have to source it for it to count, right?
And yes, and if you've been holding $50,000 in your mattress, you know, for whatever reason, because you're afraid of the bank, you need to put it in the bank, and we have to wait at least 2 or 3 banking cycles for that to not show up as a deposit.
So that's like 2 or 3 months.
Yeah, and it just the process stops.
Got it.
Yeah.
So there's a lot of people that are pulling cash out of the banks right now and stuffing it under their mattress, like you said. So if you want to buy a home after doing that, put the money in the bank, wait 2 or 3 months.
Right.
Then
and cash deposits $2,000-$3,000 depending on, you know, the loan amount. Those are acceptable, and they don't really have to be sourced. I'm talking like, you know, tens of thousands of dollars. And I've seen people literally have $50,000 in a safe at their house. And I was like, where's your money coming from? You only have $80 in the bank. And they're like, I have $50,000 cash. And I was like, oh, okay, well, we're going to have to wait a little while before we can use that. So
gotta wait a few months if that's you out there.
Yep.
I'd like to have about $50,000 stashed under my mattress.
Yeah.
Although my husband has said maybe we should.
I mean, you know, with the economy, a lot of people were doing that. They really were.
Yeah. I think, it's got my husband thinking. Any other final thoughts on mistakes?
I guess the biggest thing is, if you have a question, ask. Just ask. It's very simple, you know. Yeah. We're here to help you, you know, not judge, like I said.
Yeah. Okay, very good. Well, if you are looking at moving to Texas, fill out the Dream Home Questionnaire in the link below. And if you want to go ahead and apply for a loan, there's a link for an application down there as well as Jeff's contact. If you just want to call him and say, hey, this is my situation, feel free to give Jeff a call and say this is a situation. He can walk you through it. He doesn't have to pull your credit right up front, but he can wait until, you know, give you an idea based on what you give him, and then when it's time, he can run your credit.
Absolutely. When
it's time to start shopping. Right. I tend to, especially if you're a first-time home buyer, I tend to say 6 months to a year out. You may even want to give a call just to say, hey, what do I need to prepare in advance for purchasing a home?
Absolutely, because it may take us 6 months to get you in position. So, you know, we don't know till we look at it. Applications are free, no obligation.
Yeah, great point. See you in the next video.